Gentlemen, welcome. It's a pleasure to have you here and a pleasure to see you in this format and this forum. I'd like to start by talking about the journey from vision to scale. Each of you has built companies that disrupted and reshaped industries, whether in fintech, cloud kitchens, or venture capital, in a region that still faces funding gaps and infrastructure challenges. So I'd like to start with you, Hosam. What were the pivotal moments or strategic decisions that allowed you to not only create, but also to scale thereafter?
First of all, thank you for having me. It's an honor to be here today. So looking back at our journey, and my journey personally, both building Namshi and Tabby, what we identified early on was a gap in the market and an opportunity that deserved attention. With Namshi, the opportunity itself was retail in this market was still largely offline. It was largely in an offline or personal setting, and it lacked that element of convenience that consumers valued. And we went after that as a key problem. I think fast forward to where things are, where we are with Tabby, the opportunity over there was just largely around convenience. Again, it was we operated in a market that valued convenience and yet lacked it quite considerably, both in terms of the options available to consumers around payments. So early on, while we were building Namshi, one of the biggest pain points for us was cash on delivery and the prominence of that in this market. Even a market as developed as the UAE, we saw 75 to 80% of our transactions being cash-based. And that, by definition, is very inconvenient, both for the merchant for consumers in this market. And so what you see in a market like ours, both in the UAE, again in Saudi, is the top of the pyramid is very well funded. They have access to credit, access to banks, and so on. But everybody else is largely ignored. And we realized that that was a fundamental problem, slowing down access to growth and to opportunities for the masses. And so today where we are is we're largely a credit first financial services business, looking at providing access to credit to those that most need it. Yes, we start with retail as that was the easiest and most straightforward position to start with. But where we are today is we are funding things like electricity and water bills, some form of educational courses, insurance, and a lot of these expenses that consumers in many cases might have to delay or prioritize, where we feel that we have a very strong position to be able to provide that very large mass consumer base access to a very fundamental building block of any economy.
Wonderful, thank you. Mohamad, I'd like to jump to you with the same question. You've built an incredibly impressive giant of an organization as well. So tell us about your pivotal moments and strategic decisions that first allowed you that tipping point of launch, and then you scaled at such exponential rates over the last few years.
So thanks for having me. I think our story started way before that. So I was born in Dubai. This has been home all my life. And I think similar to many great companies that come from this region, was able to start my first business in the confectionery space. Actually, my co-founder is also here today. We built that business, scaled it, sold it to private equity, so saw the whole life cycle. It was a bootstrapped company. And then I decided, what do I got to do next? And this is where we landed on business number 2, which is solving the problem of helping restaurants scale up in this new digital age. And so I do think that the idea of building something felt more natural to me, and building something out of this part of the world and going global with it. In business number 2, Kitopi, the business I currently run, the challenge was when we first launched the business, we thought that the whole world is going to go on delivery and we were going to stop having these physical experiences. And so to do that, we're like, we need to not worry about what type of brand we need to own. Let's focus on being a cloud kitchen business. That's a term we came up with around 2018, and we were the first to do it globally. And the idea was, how do we take all these food brands, put them in one place, use one team, and cook on behalf of everyone, and build a lot of economies of scale, a lot of efficiency in order to be able to make this food delivery industry survive. Because prior to us doing that, most food delivery businesses, where they focus only on delivery, the unit economics never worked. And so as we built that over 3 years, we realized that the world didn't only move to delivery, and physical experiences mattered a lot, and having the right brands mattered a lot. And so the big inflection point we went to sometime around 2020 was realizing that we need to have the best brands, and we need to operate in an omni-channel environment. The challenge to do that was you need to have the best brands. It takes a long time to build. And so the biggest challenge we had was we had to, sometime in 2020, sit in front of, today, one of our largest shareholders, SoftBank, and convince them that we need to raise around $400 million in order to change our business model. And they had to believe in that vision. And so that was a massive inflection point in our business, but also was a massive risk, right? We were going to completely adapt and shift our business model into something that we felt was more long-lasting.
Wonderful, thank you. Mohamad mentions SoftBank's investment, as an easy feat. It is one of the most difficult. He raised that large amount of money when I was trying to scramble for 20 million. He raised 400 million. So it just gives you kind of the notion of the different types of investors, the scale, etc. Great achievements. And talking about capital, Mahmoud, I'd like to jump to you. Access to capital remains one of the biggest challenges for entrepreneurs in the region. What changes are you seeing in the entrepreneurial ecosystem, and what role are you playing in enabling the development of this?
So first of all, thank you for having me here among greatest entrepreneur in the region, not only in the country. I would say if we take a step back and look when this whole thing started, so like we're sitting among entrepreneurs who have been building for the past 10, 15 years, I would say the key themes has been and continue to be scarcity of capital. Whether it's on the equity, whether it's on the credit, whether it is on the consumer, whether it's at a kind of fund level or at a company level. But I think what has been quite promising and what has been quite exciting for all of us that there are today more market participants, more investors, not only from the region but also globally. So the SoftBank example, if you think about that, 10 years ago, that was not even imaginable to happen, and that kind of quantum of capital was not even available. But investors like that who've been, I would say, kind of topping their toes and trying to test this market. Some of them have came again, and actually a lot of new investors are coming again. The reason we keep saying there is a kind of lack of capital, because I fundamentally believe that to solve the problem, the capital has to come within the ecosystem, cannot be continuously to be catalyzed by investors coming from outside. That's always great to have. That's always exciting. That kind of give us good validations as people who are from this region that there are other investors, sophisticated, who have done well for themselves, coming and putting capital here. But the reality is there is no shortage of capital in this market and at a high level, but there is a massive shortage at risk capital. And as entrepreneurs, we as investors, we continue to kind of grind every single day. Our I would say, unspoken language is we want to change that, right? We want to attract our own capital who is sitting around us to come and be part of this market and be market participant. Because the reality is, if you look at the demographics, you look at the consumption, you look at economies, we are one of the best places globally today. That's emerging market, growing, real growth, right? Have sound economies and USD-backed currencies, right? So there is sort of kind of a very compelling, I would say, story to allocate capital here. Of course, there is a lot of challenges. enough exits or enough liquidity or IPO and all of those. But none of these things are going to be solved by themselves, right? That's why, again, we have entrepreneurs who wake up in the morning, who think about big problems and go chase after solving those problems. So to answer your question, Muna, what has changed, I would say, a lot of the things that were happening 15 years ago, 10 years ago, were more hypotheses. Today, we are living them. There is a market. There is an ecosystem. There are entrepreneurs. There are regulators. There are markets, IPOs. There is a lot of those things, right? And we just need to continue to believe in ourselves, keep pushing forward, and change that, and change it at scale, right? Today, really, we have an opportunity to change the market and the capital allocation for this sector at the scale in our region.
Sure. I'd like to stay on the capital matter for a bit longer, because you cannot build a great organization unless you have the capital. Hosam, you're no stranger to fundraising. You've done it in all your businesses, and you've done it very successfully. So talk to us a little bit about that journey in capital raise. Did you enjoy it? Was it something that came easy? Did you have to learn the lessons from the ground up? And what made you able to achieve your goals when it came to raising the right capital at the right time for your different ventures?
So the point on capital, I think very important to just appreciate is the fact or the actual raising of capital itself is not the success factor that we go after. And I don't think any of us would go out there and scream about how much capital we've raised. I think it is definitely...
Although that's debatable.
And I think that's the reason I'm bringing it up, is because for some, unfortunately, that has become the prize to go after. I think the fact of the matter is the capital is the enabler and allows us to go out and build. And so for us, I think very realistically, it was never a core focus of let's just focus on building the capital. The idea was let's build a great company, let's build a profitable company that investors will want access to, and then that capital will flow. Obviously easier said than done, but it goes back to then identifying the right opportunity, hiring the right team, et cetera, and ensuring that we have the right focus in mind. But absolutely, I mean, going back to our early days at Namshi, and we have a couple of people here that accompanied us on that journey. We'd speak to investors, and this was a completely foreign concept to them. Why would we fund a business that's going to lose money in the early days? I have a hard asset called real estate that continues to grow, and I have a nice yield story there. Why would I ever invest in risk? And so that was the early days. I mean, there was a handful of early stage investors in 2010. Today, where the likes of Mahmoud and others in the ecosystem, I think they've largely solved that access to capital piece, especially at the early stage. I think what remains missing in our region right now is that next stage of capital, the Series B, C, D, and onwards. There's very few players that operate there, and we're still having to go outside the region. But it is I think it's a natural evolution of the maturity of any ecosystem. We started with no early stage capital. That's largely solved for right now. Later stage capital is starting to develop. We have a couple of funds that are getting there on the other side as well. Second time founders and just the idea of having people that have gone through that entire startup journey. I think we're starting to get there, right? We had the Kareem story with that exit. Hopefully there are a few more exits that come up. So I'm very, very optimistic. I think, yes, while there are a number of missing components today, but it's very, very natural that we build out on that as we scale as a geography.
So would you say, in a kind of like a yes or a no, that your business unit economics and fundamentals were what got the ink signed on the paper, or was it your ability to sell your vision, or a combination of both? Where was the balance tipped?
I think early days, you're not going to be showing too many, the numbers are not going to be great, right? The investors are largely coming in based on a vision, based on a story, and how you paint the size of the opportunity. But when the tide turns, and that turned very quickly in 2021, it was very important to start to show some sort of traction on numbers, on profitability. And so building with that in mind, I think, is very essential. So sorry, it wasn't a yes or no answer, but
Wonderful.
But yeah.
Okay. I want to turn to you, Mohamad, and talk about resilience and adaptation. Everybody thinks that entrepreneurship is this wonderful journey. It's the flavor of the decade. But the reality is, it's the hardest job out there. Every founder faces moments of extreme doubt and uncertainty. Can you share with us a true defining moment where you had to face a very difficult decision that actually risked your company's trajectory, and what you did?
So I'll also take a couple of steps back to, I've witnessed this in growing up. My father was here in the 60s, and we came from a mid-income family. And around when I was 16, he went bankrupt. And being 16 and seeing that obviously traumatized me, and the whole world of entrepreneurship at that point didn't look too rosy in my eyes. But so that was the first step towards us being resilient as a family, and understanding that you got to reinvent yourself and you got to keep fighting. It was amazing to hear Saint Sajwani talk about that earlier, and work hard, and you're going to go through cycles, and you got to keep working hard. And I think that's an attitude I witnessed as well growing up. So bringing it back to what we go through now, I think there is many decisions we take and many incidents during the day and during the years we went through that made us think, are we going to come through this? And balancing three big dimensions is always tough. You got to balance culture, you got to balance customer experience, and you got to go balance profitability. And we sometimes got it wrong, and it's always been difficult, especially when you're funded by. We raised a lot of capital, which also comes with all the conditions that raising capital means, that they want you to grow fast. All the plans you put in place, they want to see them come through. And so that also meant that we got to keep growing fast. So how are we going to manage that with great customer experience? So you lot breaks when you grow fast. And how do you manage culture, not burning people out along the way? So I guess the earliest decisions were grow at any cost were big mistakes, so we had to reverse a lot of these. And changing the business model was probably the biggest inflection point, where we wanted to go from being a cloud kitchen licensing business, who most people still think we are, to a business model which is more of an F&B ecosystem, connecting all our brands in together. And doing that with a lot of uncertainty if we're going to come out successful or no at the other side. But what's amazing is doing it with a group of very close friends and co-founders who were with me, where we could share this crazy view together on, like, we will come out of this successful.
Amazing, thank you. I want to stay on resilience and adaptation, Mahmoud, because this is a core DNA to any entrepreneur and leader. It's the ability to continue going and to think out of the box and be creative. Talk to us about your experience around resilience, when you had to pivot, if at all, and what you did in the face of adversity.
Yeah. I'll give an example, actually, in Shurooq itself. So similar to kind of the story that Mohamad is sharing, and how people perceive you today as Kitopi, I think also people still perceive us as a venture capital firm, and we've been trying to sort of kind of reposition ourselves as a multidimensional, or think about it as a multi-generational sort of kind of investment company. So one of the things that we have realized early on in our journey, if we're just building a venture capital firm in a market that does not have all the stake of capitals, right, on like the late stage or the credit side, or all these different type of capital available in this market, right? You are leaving so much on the table in terms of kind of value, that other investors who are coming from outside the region trying to kind of squeeze you on that value. And ultimately, we have a fiduciary duty to our investors, right, our LPs. And by the way, kind of on a side note, we always think about Shurooq as a startup itself, right? It just happened to be that we are in the business of investing in other startups, right? And we do have two sides. like very similar to two-sided market. We have LPs who are investors, who we have fiduciary duty to them, and we do have portfolio companies and founders and partners that we partner with them for generation. So going back, in a market where you still don't have the entire venture capital as an ecosystem fully developed, going to your LPs and tell them, you know what, we think we cannot sustain or we cannot just continue to be a pure venture capitalist. We need to have a growth vehicles, we need to have credit vehicles, we need to actually augment this sort of kind of investment firm to be able to partner with our founders the best way, right? And what we have realized is extremely difficult to identify people like Hosam, people like Mohamad, early in their career. Although I made a mistake, and I can say this in front of people, we were having a lunch back in the days when he was still in the concept, thinking about Kitopi, and I think I was not resilient enough to kind of see through the vision. But what we have realized in our journey is when you identify those amazing founders, credible people who are super ambitious, who are very hardworking, focused on what they're building, and they're sort of kind of orchestrating this balancing between capital, profitability, culture. Once you identify them, you actually want to partner with them for life, right? And how do you do that if you have a specific sort of kind of mandate or a specific sort of kind of timeline or a specific thing? So you need to be thinking outside that, and you need to be always at their service and be their partner, right? We are still in the journey of building that, but that has been one of the, I would say, kind of inflection point on how to reimagine yourself as an entrepreneur who building a business to essentially enable and service your partners.
Sure, thank you. Hosam, I want to turn to you. I want to talk about going beyond unicorns, creating an ecosystem that actually sustains innovation. So you're a serial entrepreneur, you've built successful companies, and that's an achievement. But the reality is your company is only an achievement insofar that it fosters an ecosystem that actually develops and grows. So talk to us about two levels. One is, what role do you see yourself as Hosam Arab in playing a role in shaping the next generation on one side, and on the other side, what role do you see your companies playing in reshaping the ecosystem to a better place?
Yeah, tough question. So I'd like to say that I'd like to see a large role for myself personally in shaping that, but unfortunately and realistically, it's easier said than done. I think it will come at the cost of something else, and I think the primary focus for me today is to make sure that my company is a success, right? And so while there are other parts of the ecosystem that I would like to personally play in, I unfortunately do less of that than I believe I could or I should. And again, largely due to the fact that there is an immediate focus for me today, which is the business. Having said that, I also do believe that our business can play that role, and our business should help foster further innovation and further drive in the economy. And the ways that we could do that is by developing that ecosystem today more directly within the realm of what we do, specifically around providing credit. So initially I talked about providing credit to consumers. We also have realized that there is a large opportunity in the business space, business-to-business space. So we are starting to provide access to credit to small businesses that require access to capital that the banks underserve today, and allow them to scale to get to a point where they're also driving various parts of the economy. We also want to be able to develop a talent pool within the business that can go out one day and build themselves. We pride ourselves by providing every single employee in the business with equity, and equity that hopefully one day is life-changing. And life-changing both, I think, from a personal level, but also to enable people to go out and start to take those risks, right? The reason I was able to take the risk with Tabby in the first place was because there was a small exit at the time of Namshi that gave me that comfort to go out and say, I'm going to take a risk again. And so, those are the types of, we're trying to be a bit of a role model as a business to those around us, and hopefully one day we can look back at that and say that there was something that came out of it.
I think you're too modest. Both your businesses have been incredibly transformational. Even though you haven't said that, I will say it. You disrupted both industries that you touched, both e-commerce at a time when it was incredibly nascent, and you said it earlier, investors didn't want to touch it, and the ecosystem didn't understand it. Yet you paved the way, and e-commerce has enablers that depend on it. So you cannot succeed in e-commerce unless the enablers are maneuvered or conditioned to support you. And so that's what you did inadvertently or deliberately. And similarly with Tabby, I mean, Tabby is everywhere. You're enabling an entire ecosystem and disrupting the payment system. So kudos on you. And all your businesses, I have to say, the cultures that you build within your organizations are phenomenal, and that goes a long way. And I'm going to come back later to Mohamad. I'm going to talk about culture, not yet, but I'll come back to that, because that's very, very important. Because how do you grow a culture of entrepreneurship and excitement and risk-taking and treading into the unknown? All of that is incredibly important, and ecosystem building, and you've done that. So I've just added to your answer.
Thank you.
If I may. So I'd like to talk now and shift a little bit and talk about what policymakers can do. In this whole realm of entrepreneurs are brave enough to take the risks, but policymakers need to stand side by side in enabling. So, Mohamad, I'm going to come to you. What can policymakers and ecosystem players do specifically to further support the growth of scalable, tech-driven businesses? What policies or initiatives could make a significant difference in empowering entrepreneurs? I'm not talking about small changes. What's going to really turn the needle, in your view?
So I'll try and answer this to two different answers. The first answer is, I was recently sitting with one of the world's largest investors just a few weeks ago, and he asked me a question. He said, why should I invest in the region? So they've never invested in the region, at least not in the tech-enabled or tech sector. Why should I invest here? There hasn't been any $10 billion outcomes, and this was maybe a few days before Talabat's IPO. And as opposed to India, China, the US, we see a lot of those. And without having these $10 billion outcomes, it's very hard to get the right return profile at their league. And I think he's totally right. And I think we really lack the ability to build a lot of $10 billion companies, not one or two, but 30, 40 of them, and to graduate a handful of them every single year. And one of the challenges I see is because we operate as singular countries. We don't operate as one Arab world. And I think that's something, while very difficult to do, I think it's probably going to be one of the most important things. If you look at the numbers he was telling me, he's like the GCC is a $2 trillion GDP economy, and India alone is around 4. And if you remove the oil economy out of that, you're left with a few $100 billion. He's like, how can you create a few $10 billion companies a year when that's the size of the market? And so I think there's a couple of things we need to think about. So first, we need to make this one Arab world, not many different siloed out markets. And that's very complex to do, but someone needs to figure it out. And second, we need to build products and tools and technology that we can go global with, and not just focus on our own region, because our region is small. And I think the only way for us to do that is to invest very early on in technology and science, and to have a lot more graduates in science, as opposed to us all thinking very small. So I think that's first. And the second is to allow entrepreneurs, or allow Arab entrepreneurs to be dreamers. And that's a big thing, right? So if you look at the UAE, I didn't have to think about that. Like, am I going to be enabled to dream big? This was a natural thing. But in other parts of the Arab world, just to dream big, you're always hampered and faced with all these issues that you can't be dreaming big with. So the solution there, I would encourage all Arab entrepreneurs who can't dream big in their countries, just to move here and to dream big, make this their base, and go global with it. And at least that's what we did.
Wonderful.
Maybe just to add on the first point that Mohamad mentioned, and maybe while things are great in Dubai, and honestly, I mean, we owe a lot to what we've been able to build over here. I think it is important to also provide some form of constructive criticism where there is, right? And here, in particular, while we also have a large Arab world that is multiple countries and it's very segmented and fragmented that way, even at the level of Dubai, we have 10, 20 free zones right now that we need to operate within and we need to navigate within. A company like Tabby today should not feel the pressure to move jurisdictions within Dubai in order to continue operations, right? It's things that, unfortunately, we're having to deal with, and they take away from our focus on building great businesses. Why should we have a DIFC that does not allow for a onshore financial services company to operate? Sure. It makes very little sense, and it's unfortunately these are things that we're having to talk about. So if there are policymakers around today, it's something that we should definitely look to address.
Wonderful. Let's talk about, you both mentioned technology. The reality is, how do you bridge that very wide gap of technology and let technology be really a youth enabler? How ready do you believe the Arab markets are for digital transformation, and what more needs to be done to accelerate this shift? So, we saw a few weeks ago the DeepSeek news. Will we see a digital transformation coming out of this region and a technology first mover coming out of this region? What will it take to get that to happen? Mahmoud, I'm going to turn to you.
There should be no limit for what we can accomplish, what we can do, but also there are input. Right? You cannot expect output to happen without putting the right resources, the right inputs. Inputs for like a level of technology advancement like DeepSeek and all of those would require a lot of PhD, a lot of data scientists, a lot of engineers, a lot of compute power, a lot of people in the shadows working 24/7. To Hussein Sajwani's kind of point, no weekends, no time off, none of that stuff, right? And that would be an expected output, which means could happen and could not happen, right? Now, there are a lot of actually cool, deep stuff happening in the AI in Abu Dhabi ecosystem within some of the group, which is quite exciting. But if I were to kind of abstract this to talk more of at the Arab world level, I think what Hosam and what Mohamad kind of talked about, which is something in an ideal scenario, is how can we abstract the operating system, which are the countries, to the software system, which are where technology should operate, right? And what we call kind of the passporting or the fluidity of technology and entrepreneur across these markets in a fashion that is kind of addressing the concerns of different regulators and different stakeholders. What stakeholders, what regulator they care about? They do care about, or policymakers, they care about sovereignty of data, sovereignty of their of the information. They do care in the fintech space about kind of control, not over leverage, and leverage a lot of these kind of stuff, right? Protecting the person on the street and all of that. I think there should be an effort from both sides. I can speak probably on behalf of all the entrepreneurs in the room and outside the room that all of us would be quite open to have these conversations. We in sending an open invite for different regulators, let's actually sit and discuss and move the ball forward, because we often have a lot of discussions, but ball does not move forward, and that is not constructive to anyone, right? To accomplish this $10 billion kind of outcome, I disagree that there is, so factually, there is not enough $10 billion outcomes. We have talabat, so that's factually. But I think the market has the opportunity and the ability to produce 10, if not 20, $10 billion outcomes, but we are hindering ourselves by our own doing, right? And that comes from a lot of different, actually, unspoken things, from regulations, from participation, from that simple things like, okay, you have to move your office from the IFC to operate. Like, actually, I was not able to open an office in the IFC because I operate in the ADGM. Like, simple things that are, for the greater good of the country, are quite simple, right? And I have Dubai, DFF is actually part of my investor base, right? So it's like a lot of these simple things that we can, I don't want to say eliminate, we sort of kind of can address, because there are good reasons why these things happen, but they can be addressed in a very progressive way to enable all of us to operate in a fashion that address the concerns and the importance nuances for all the stakeholders involved while we accomplish the business outcome,
Right.
which is creating value for all, like the entire market.
Wonderful. I know we're almost out of time, but I still want to get through a couple of questions. And Mo, I want to come to you. Just a yes or no, do you believe we can bridge the technology gap in the region? Do you think new disruptive technology can come out of this region as an initiating point?
Yes, and
Okay.
how is starts with intention. The intention mentioned by His Excellency Khalfan was very indicative of where the government's investing in, and I think we need to just move out of the way of entrepreneurs to actually be able to actually execute on that now.
Stay with you for a moment, and I wonder, how many employees do you have today?
We're 6,000 people.
6,000 people, all right. You have Gen Z and millennials. Okay, talk to me about that. What's the difference between the Gen Z and the millennials? What's the DNA? How do you build this culture that's very robust when you have two different groups that operate very different and respond to different leadership styles?
So every 3 months we run what we call a Voice of Kitopian score. We test to see how are we doing in terms of culture. And in different pockets of the business, we score very high. But there's a few pockets, especially where Gen Z colleagues are.
How big is that test?
It's around 15% of the business. But they're concentrated in a few pockets that are relevant. And we typically don't score as high. And a lot of the time, we figured out, okay, our pay is better than benchmark. I think we have we have a flexible work environment. They can work from anywhere they are, thinking that's what's most important. But the reality is what we failed to do in the early days is we failed to include representation of them in leadership, in making decisions on what's relevant for them, and how we recognize them, and how what does growth mean to them. And so it's a very different world to the world of the past, where someone would join a company, stay there for 15 years, and eventually look to retire there. It's a world where they want a lot more growth. There's a lot more entitlement than ever before, and just bringing them to the table to think through what's relevant for them was what helped us.
Amazing. I'd like to finish with one last question. I want to talk about the trends coming into the future. So just very briefly, each of you, talk to me about what trends do you believe are emerging? That's the first part of the answer. And the second part is one piece of advice to anyone in the audience who wants to go tomorrow and disrupt an industry. What's the advice you would give them? So 2 questions. Quick answers. Before we get kicked off stage because we're out of time. Mohamad.
All right, I'll kick it off. So one, I took my son to the doctor the other day. I thought he broke his leg, and I had to wait a couple hours to get the radiologist to tell me if he actually broke his leg or no. And then I downloaded this new AI tool, which within a few minutes told me he didn't break his leg, right? So the arbitrage of knowledge we have versus doctors is shrinking. I think that's a world where this part of the world
Amazing.
Can do a great job in. That, along with everything on personalizing nutrition, at least the space we're going to be playing in, and how do you take people's blood work and personalize food for them based on what's best for them.
Wonderful. Piece of advice for someone wanting to disrupt an ecosystem.
I'll go last.
A trend that I'm seeing, and I actually believe in deglobalization of the application layers, right? That's going to happen. I don't think we're going to see a lot of kind of new metas and news like new of these big guys, right? And that what would mean for the next one is actually there is a lot more opportunities to build, I would say, local to the region, local to global type of things, right? So the opportunity today is even larger for builders and entrepreneurs. So the advice, just go and do it. Just go and build.
Just get out there and do it.
Yes.
Yeah. Fix as you go.
Fix as you go.
Great advice. Hosam.
In terms of trend, I think nothing too surprising here, but what we're seeing in the world of AI is pretty incredible, specifically around one of the challenges that we have in the market, which is access to tech talent. We're able to address a lot of that and fix a lot of that through development through AI, right? So where we are today, over the last couple of months, we spent a ton of time trying to understand how we can use AI to build tech internally. Some of the experiments that we've run, a task that could take a team of engineers around a week is being finished within 4 to 5 hours, right? And that then addresses this talent gap that we have in the market around tech talent quite considerably, right? That I think no longer becomes an excuse because of how much more efficient AI is making development. In terms of advice, I think it's something I've held close to my heart from quite some time. It is really do what you love and ensure that you wake up every day looking forward to what you're going to do that day. And once that goes away, it becomes very, very difficult to motivate yourself and do more.
Do what you love and what creates impact.
Yes.
Because what you love will eventually create impact. Mohamad.
So I would say, definitely think big and don't solve something that's not worth solving. Like, think of a problem that's really worth solving, and think of building something that's more global in nature than just solving the problem of your small ecosystem. As I said, I mean, it's a few $100 billion GDP ecosystem, and unless we're going to think to build globally, we're not going to build something too super disruptive. We need another $1 trillion company coming out of our region, not just in the US. And I think if it's not us, then who's going to build it?
Wonderful. And I'd just like to add to all of you, building an organization that creates true intrinsic value in the ecosystem and amongst the consumer is ultimately the organization that's going to make money. And you said it earlier, the entrepreneur who goes out there with the sheer objective of making money doesn't succeed or is short-lived. But what are you going to do to solve a need gap that's critical, that's important, and that's going to disrupt the ecosystem? That's what all three of you have done beautifully over the years. And inshallah, with the young Arab leaders and with the Arab youth of tomorrow and today, we will see the mirrors of you going forward. So thank you, everyone, for being here with us, and thank you.
Thank you. Thank you. Thank you.